I used ChatGPT to audit my last 12 months of trading data, and what it found is the only reason I'm finally profitable today. It took me 4 years of failing, 4 years of blowing accounts and total frustration to realize that I wasn't the problem. My filters were. The AI identified the specific junk trades that were bleeding my account dry and showed me exactly what to cut out. Today, I'm showing you the exact trades I take, and more importantly, the trades I don't take. This is part 2 of my 9/20 EMA strategy guide, so stick around if you finally want a strategy that actually works. This is part 2 of my EMA strategy guide. In the first video, we covered the basics, how to set up your 9 and 20 EMAs, and how to execute long or short positions when price enters our value zone. But today, we're taking it a level deeper. First things first, I'm going to show you the secondary indicators I use and exactly why you should be using them too. The first one is volume-weighted average price. I just call it VWAP. Go ahead and add that to your chart and change the color to purple to keep your visuals clean. The second indicator is the Lux Algo opening range with breakout. Open up the settings and change the time period to 30 minutes. Now, you need to set this to your specific time zone. For me, the New York session opens at 8:30, so I'll put that in here. In the next box, we're adding 30 minutes, so we'll set that to 9 o'clock. Once you click OK, the indicator draws a shaded box on your screen. This isn't just a box, it's your market structure. It tells you exactly where the 30-minute opening range high and low are. Now, to keep my trading consistent, I categorize every signal into 2 distinct trade grades. First, we have the A+ setup. This is my gold standard, my highest probability setup with the absolute best chance of winning. So what makes a trade an A+ setup? It's actually very simple. An A+ trade happens when the market is in a clear, undeniable trend, and price makes a pullback right into our EMAs. We aren't trying to guess where the market is going, we're simply joining the trend. Now, let's talk about the B setup. A B setup occurs right when the previous trend has broken, and the EMAs have just crossed over. You're essentially taking the very first pullback into the new trend. Statistically, this is a lower probability setup compared to our A+ trades, but don't let that fool you. Through my backtesting, this setup still maintains a 63% win rate. Now, not every EMA pullback is created equal. They might look identical on the surface, but the win rates tell a completely different story. Some pullbacks are high-probability base hits, while others are nothing more than high-risk traps designed to stop you out. So, let's look under the hood. I'm going to walk you through exactly which setups I avoid at all costs. The first move I avoid is the VWAP bounce trap, when price hits off the VWAP and then bounces right back into our EMAs. It might look like a perfect setup, but the data is clear. Statistically, it's a loser. It will stop you out way more often than it wins. Avoid it at all costs. The next rule is this. If price breaks above or below the VWAP, the EMAs need to be trending above or below it too. In this example, until I see both EMAs get above the VWAP, I'm not touching anything. Once they clear that level, then it gives us the green light to take the next pullback into the EMAs. Here's an example of when you shouldn't take the trade on a VWAP break. You see price break below VWAP, but our EMAs are still sitting above. If I had taken this trade short, it would have been a stop out. Now, let's talk about the orb range. When price is inside this range, what you'll notice is that the top and the bottom act like magnets. If price hits off the orb low and bounces, there's a good chance price will eventually hit off the orb high. It's essentially just ping-ponging between levels. The real move happens when price breaks the orb range and bases. This is when you'll see a trend actually start in the market, and that is where we find our best entries. My rules on the orb are very similar to VWAP. If price hits the orb high or low before pulling back into the EMAs, I simply won't take that trade. Let me explain exactly what you're seeing here. This is the first 30 minutes of market open, and the orb high and low are about to be set. In this scenario, you can see prices sitting right at the orb high, and this next candle attempts to break out. For me, this is a no trade because price has already hit orb high. Even though I had my order waiting inside the EMAs, you can see exactly why I avoid these. Price couldn't hold the EMAs, and it would have stopped me out. I found that I get stopped out way too often in that scenario, so it's just not worth the risk. Now, let me show you exactly what I need to see before I enter a orb break trade. My filter is simple. If price breaks the orb, then both EMAs must have broken it as well. Price breaks the orb high here, but notice the EMAs are still trapped under the range. This is where most traders get caught in a fakeout. I need to wait until I see those EMAs break above the orb as well. Once they clear it, I'm set. I would have my orders waiting right inside that EMA zone. Every pullback into the EMAs from this point on would have been a high probability long entry. Hopefully, with these no trade rules, you can start to find more consistency in your own journey. Most people think trading is about finding every single move, but in order to be truly profitable, the most crucial thing you can do is cut out the lower probability setups. One last thing, I actually created my own custom indicator in TradingView. Once you activate it, it shows the 9 and 20 EMAs, but you'll also notice a line exactly in the middle of both. I like to have my limit order waiting right in the middle of those EMAs, so this line tells me exactly where to place it. It removes the guesswork and makes my entries mechanical. Now, I want to get this into your hands, but I want to see the interest first. If I get 10 comments saying indicator below, I'll make the indicator public on TradingView so everyone can use it for free. It's a simple tool, but it's been a total game changer for my consistency. Stick to the rules. Keep hitting those base hits. And I'll see you in the next one.